Good weekend, all. Ira Epstein of Linn & Associates with your metals market wrap-up on your weekly edition, which means all weekly charts for this Friday. And we are now at the 5th of March, 2021, and boy, it's cold. Chicago, we're about 10, 11 degrees. We're not getting much over the high teens for a week and a half. And we will be, without wind chills, 7, 8 below zero in the evening. So we're here this way, and if you look at the maps, it's going other ways. I only mention it because it's going to put some demand on natural gas and distillates. It was an interesting night because the Senate voted literally all night into the wee hours, and at the end of the day, we saw that they control the Senate on a split vote of parties going for parties, and then, of course, VP Harris making the casting vote there and breaking that tie. Well, we saw something else today, too. We saw that President Biden came out and he made a presidential statement. He said, I ran on a $1,400 payment to everybody, basically, for the next relief package. And no, what the Republicans want to do is cut it. That's not going to happen. You are going to get that deserve it, your $1,400. He's telling the market how it is. He's president, and he's putting his stamp on that. Very important. The next thing that he did is he had said he wants to get beyond all this so we can move on to infrastructure. It's one of the reasons that I'm looking at PAVE on my Spider ETF videos. But those two statements mean that we're going to be spending a heck of a lot of money. And as such, the bonds and the notes, they start increasing in yield. I think you'd agree with that. The dollar fell because we're going to borrow a heck of a lot more money. And your metal markets took off because this could be the beginning of some inflation going through there. That's how I viewed it. The stock market, of course, took the news great, and you went to all-time highs in a number of those markets. In the gold, when you go to a monthly chart, you have a pattern of a higher high and a lower low. That is not a trend. The market has been in a corrective nature. Some might think it's going to the red line, which is the 18-month moving average of closes. I don't know if it will or won't. It's certainly close enough at $60 away. It won't take much to do it, but we'll see. Markets have a tendency. It's been hanging at this level, trying to find its footing. I'm certainly not in the bull camp on the monthly chart, but nor am I in the bear camp, and you'll say, why not? Because you're over the 18-month average, which means my bias is up. So I have a market, and on a monthly chart, it takes a long time to get corrections, that is finally to the point where both numbers, we don't have an overbought condition. If I take you back to last month, you do. If either number's over 70, you have an overbought condition. Once they're both out of it, you're not overbought anymore. When we come to the weekly charts, and I've been showing this, as you know, during the week anyways, you're still well underneath that 18-week average. You still have this thrust that took place, and you're staying within those ranges. As we come to the bar chart itself, the market has been here, been doing that on a weekly basis. Can it get back into here, the low 1750 area? That'll be the question. When I look at the chart, I want to see where the swing line is, and we're in a downtrend. You have a pattern of lower highs and lower lows. What would negate the downtrend is getting back over 1876. Now, if you did that, would you turn the trend up? And the answer is no. And that's because you have a low that's already lower. Let's assume you just zoomed straight up. You'd still have a lower low, higher high. Where's the resistance point in the market? It's the 18-week moving average of closes, and look at how often it's been fighting its battle there. Now that markets get under it, like to rally back to it. Markets that are over it like to come back this way. You can see when you were down with it, you fought your battle there. Understand the purpose of the moving average. I teach this in my charting course. I hammer it to the students there, and then in my morning subscriber videos, I really reinforce all this training. It's very important. So, as I look at the market, trend down, we've defined where the resistance is, 1867.30. We've defined a number that on the current chart pattern you need to get over to break the downtrend. The support, right here. 1786.80. This week's low, 1782.80, and you bounced away. I teach that the first time that you hit a Bollinger Band is where I say the pros are taking money off the table. Now, can you have a trailing stop? Certainly you could. In this case, if you did, you were stopped out because the market hit it. Well, I didn't say that yet. I think you're going to get stopped out. I'm ahead of myself. I think it's going to bounce rather hard on you this coming week away from there. We'll see if I'm right or wrong. And I've given you the reasons why. I think the market will digest that over the weekend. In terms of momentum, trend is down. Lower highs, lower lows pointing down. My problem is you've already hit the downside target. So are you going to lean on it again and stay there becomes the question. There's no reason to be long. There are reasons to be short. The resistance is 1867.30, and a move over 1876 breaks the downtrend. The gold-silver ratio continues to favor on a weekly basis the silver market. And as you can see, the silver's got a pattern on weekly charts of a lower low and a higher high. Again, you get up to that Bollinger Band, and that's where I think pros were taking a lot of money off the table. If they got some of that, great, but by the end of the week, you had given all that back. We'll see what the market wants to do. Momentum is flat. Again, not a trend, fighting now a bit of a battle at that upper Bollinger Band. Copper market, keeping its bullish embedded reading. Now, the market went down, and last week it did what I call a kiss. And the kiss was, you're trying to lose the embedded reading and you didn't do it. Now it's turning back up. So while we've been in a correction phase, and I think I've been ultra clear each day at the end of the day videos and certainly in my morning subscriber, I just think this is a correction as the Chinese Lunar New Year stares us in the face and demand pulls back. But I think the demand for copper is going to be great. I think if President Biden is talking infrastructure, infrastructure means copper usage. It doesn't mean no copper usage. So, another element that I have to think about. Platinum. You wouldn't know it from the daily charts as strong as the weekly is. This market's just kept its bull trend fully alive. It has an embedded reading. It doesn't back off. It acts like it wants to go to 1178.20. To prove my thinking wrong, you'd have to get back under 1055 and lose the embedded reading. Till that occurs, I think the pros are buying. And in the dollar index, I think that this correction that began, it really began in November, has run its course. Past tense. I think you went up today and you rang the bell and said, okay, that's the bounce. Now I've got to restructure. What is the next trend in the market going to be? And if it's down, it'll restructure from this and then start down. And if I'm right, then you'd go for the Bollinger Band again. If I'm wrong, will you go all the way to 94? I don't think so. So I think that you're at a very, very important area, one that you don't want to lose sight of in any manner. As I tell you, in the mornings, I covered the morning subscriber video. Now, on Saturdays, I post my weekly subscriber video. And that's where I cover all the charts that I do in my dailies with weekly versions, and sometimes I revert back to the dailies and compare to the two. I've already done the spider video. That'll be posted in about 20 minutes or so, and the rest of them will be there for you, 1, 2, 3. I might do tomorrow, like I said, Saturday, I'll probably do the futures one. I wanted to get these out for everybody. But you can view my videos, if you're a subscriber, on free app that we give you for both your Android and iOS system. You can watch it on tablets. I'm going to give you the news of the day with them. I'm going to cover the markets early, and I'm going to cover all these markets in this manner, that sequence. And if you're on our website, you get a pull bar that you use on this, and it just takes you to areas you want to. You watch the whole video. They are full of specific recommendations. If I don't have them, as you saw, my subscribers know I didn't put any out for about 5 days. Now they're coming out fast and furious because the market has changed again. How do you get this? It's simple. $7.95 for 30 days. Each week there's 6 videos. 6 times 4 weeks. You're getting, what, 24 videos? It's a pretty good deal. And I'm doing, besides that, the spider videos. And then besides that, the morning flash videos and the other. You're getting a lot of information. How do you get it? Just go to the website under the word research. It'll take care of it. You can call my staff at any time. They'll call you back if you leave a message, or if they're there, they'll pick it right up, and they'll get you all set up. I'm Ira. Hope you like this. I'll see you, let's see, that'll be Monday. Take care now.